Hi, I'm Joe Boggs with Highlands Residential Mortgage, and I'm here with Barney Schwartz with Assured Partners. We are both on your Realtor and Lender Committee, and today we're having a conversation on what's going on in the homeowners insurance world, because I know that's impacting us significantly. So the first question that I have is Barney, why are insurance premiums going up so drastically and so rapidly here in our North Texas area?
Yeah, hey, great question, and one that I get asked way too often. It's due to a few reasons. The interesting thing is that most of the company's results, because they'll come out and meet with us, and they'll say, these are our results without catastrophes, and they're paying out 20 to 30% on the dollar, which is absolutely phenomenal. If those were the results, then we would see rates tank. But then they say, well, with catastrophes, our results are somewhere between $1.10 for every dollar we take into $1.20 that they're paying out. So the bridge between non-cat results and cat results is humongous right now, and and not just this year, but in the past.
Right.
One of the insurance companies said last year, 2023, there were 23 separate $1 billion plus catastrophe losses in the United States.
And a huge chunk of them are here with hail damage at least, right? I mean, I'm sure that's one of the things that tornadoes and hail damage probably impact our area greater than others.
Yeah, so last I heard, Collin County was the absolute worst county in the whole United States for hail catastrophic losses.
Ironic, we're the safest county to live in, but then again, catastrophe like that does happen. It's something that we deal with, so I can't imagine. I mean, a lot of these carriers, because you probably represent, 30 different carriers, I would think, something like that?
Yeah, and so the bandwidth of what we had maybe even 3 years ago compared to what we have today, it has been significantly reduced. And because there's fewer players, guess what? That's naturally elevating rates as well. So you combine the catastrophic losses, you combine the lack of availability, you combine inflation, you combine labor shortages, and it's just like the perfect storm for rates to increase.
I didn't even think about that, how expensive construction has become now, and the delays because these contractors are so busy. I didn't think about it like that way, but yeah, that's also going to increase the loss for the carriers. So whatever reason, if the accountants count the beans, if they're in the negative, not good. And so I bet there's a lot of folks that aren't even writing here locally, right? Some of the big players even.
Yeah, so we've seen companies like Kemper, who been in the business probably 100 years, completely out of the auto and home market.
Wow.
We've seen companies like Germania shut down for new personal insurance. They're a long-time Texas farm mutual company. Wow. Travelers just recently announced they're shutting down for new business in certain zip codes, and with a heavy concentration on Collin County.
Less competition is going to drive price. And then what would you say on particular homes, bringing it down to a micro level, are there particular homes where the insurance premiums are going to be significantly less?
Yeah, so age of home, the older a house is, the more it tends to increase the rate of the premium. The age of roof is a huge rating variable. So if you have a roof that's over 10 years old, some companies won't even insure you. And you remember what I said earlier, that the pool is shrinking, and what you can't do is afford to be in a situation where the market for your house is shorter than it really would be normally. So those are two of the big factors. Credit, insurance companies don't run credit scores, they run insurance scores. But typically the person with good credit is going to have a better insurance score. So what people don't realize is sometimes when we flip on two spouses, that the one with better credit will result in a better insurance premium. So tip for the person out there buying insurance, if one of you has better credit than the other, put your name first when you go and shop the insurance.
And along that same lines then, what else can the particular buyers, what could they be doing now? Let's say they're wanting to buy a house next year. Are there things that they could be doing right now to prepare to get better insurance premiums?
Yeah, so people don't realize this, but keeping your auto record clean can have an impact on your auto insurance. And the reason why is some companies are now coming to us and saying, we'll write the home, but you have to put the auto with it. Mm-hmm. So if you have a situation where the auto is not competitive, but the home looks really good, but the company's saying, hey, we won't accept it unless you put two together, then it really can create a dicey situation. One of the things a consumer can do is form a relationship with your agent or broker. Before you report a claim, call them. Yeah. Make sure that it's not going to result in just a huge increase in premium. Right. Had a situation with my daughter, sideswiped a car pulling into a parking lot. And so, your first inclination, let's call up the insurance company. Well, their damage was, I think, about $1,700. And yeah, I made my daughter drive around with a little scratch on her car to remind her of the incident that she had.
Good fathering.
Exactly. But then when I went into the insurance company system and I dummied an endorsement, policy change, and put in one accident, the rate increased $900 each year. And that's going to extend over 5 years.
So within 2 years, you just be breaking even if you just went ahead and paid cash for it yourself.
Right. Now, here's the bigger problem. Let's say she has a second accident. Yeah. 1 + 1 = 5 when it comes to insurance rates. So the biggest thing that the consumer can do is don't report minor accidents.
Makes sense. Yeah, it's great. That's good advice for them to be thinking about now, because a lot of people we talk to, they say, well, we're going to buy a house next year. So it's great that they have some tips that they can do right now that would put them in the best position when that time comes. So what else could set one particular house apart that would be more expensive that a prospective buyer don't even know about?
Yeah, so it could vary by zip code. It could vary by street. It could vary by so many different components. It depends on what their concentration is for that particular area. Right? So we're having companies now saying we're shutting down certain zip codes. Other companies may say we're going to increase the rates for certain zip codes. So that could be one. Second thing could be age of roof. Now, if they both have the same roof, then it's going to come down to claims.
Makes sense.
So it's never, and maybe you're getting to this, it's never been more important to shop for insurance during the option period.
That's exactly where I was going with this. My next question was going to be, as a matter of fact, what should realtors be doing right now as a preemptive strike on this while they're out showing homes?
Yeah, so there's very few people at the insurance company level that have incentive to write business. It used to be 2-3 years ago, we could pick up the phone, talk to the underwriter, have a conversation, say, look, this is Joe. He sends me a bunch of people for insurance. Can we make some bend on this? And you didn't always get your way, but you had a chance.
Sure.
Now it's like, don't even call. Don't even consider it. So we have some companies that if there is a single claim on the prior house, they don't want it.
Man.
If there's getting back to what we talked about the minor claims, if I'm in a home and I report a $2,000 water loss, and then we have that huge freeze that we had, so now I have 2 water claims, the person buying my house may not be able to get insurance.
No kidding. And it had nothing to do with the prospective buyer whatsoever. It was the behavior of the previous owner.
Or the construction of the house, or, let's face it, if there's a leak under the slab, is there a chance of reoccurrence? That's what the insurance companies are looking at. They would rather insure a house that didn't have the leak under the slab.
Wow. So I always like to make things an optimistic outlook. Doesn't sound like in the foreseeable future we have a huge optimistic outlook on premiums anyway, as far as insurance goes. What do you see in the future? Where are we going here?
Yeah, so I am somewhat optimistic, because I think now that companies have gone to a minimum 2% wind hail deductible, we're actually seeing some companies come out at 3% and getting relatively somewhat competitive. You remember what I said earlier about that spread between the 20% result and the 110% result? Well, if you have a 3% wind deductible, guess what? That gap is just now bridged somewhat.
Right.
So I think what's going to happen is companies are going to come out with higher deductible options, and those higher deductible options are going to be at quite a bit lower premium.
Gotcha.
Because remember, 20 cents on the dollar, they're printing money. What they're trying to avoid is that 110 cents on the dollar, 120 or $1.20 per dollar.
And as a lender, we need to start taking that in consideration, that folks need to have some reserves when they close on a house, because what if they have a 3% deductible on a $500,000 house? They may not, buying the house may take everything that they have, and they don't have that extra 15 grand laying around should that happen. So I think responsible lenders should start having those conversations as well.
Yeah, and we're seeing some issues where we quote 2%, but because of DTI issues, the buyer can't buy the insurance, so we're having to increase to 3%. We see the premium come down a little bit, and now the deal can close.
And we've run into that too, and having great partners like you has been huge, because we get someone pre-qualified, and as these rates are going up, they pick a particular home that may be of high risk as well, and they, yay, we got an accepted offer, and then we go get a quote from you, and it's much higher than the lender originally quoted, right? We used to be able to quote $100 a month, and of course those days are gone. But even if I'm quoting $300 or $400 a month, and it comes in at $7,000 now, that increase in monthly homeowners insurance could make their debt to income ratio too high to qualify for the loan program. And so if I hear you right, your advice for these realtors and lenders right now is just be super proactive and lean on your partners to get things done in advance to avoid those issues.
Yeah, and once you get out of DFW, the situation gets a lot better.
Yep.
Like we just quoted a house in College Station. It was ultra competitive.
Yep, I'll be damned.
But they don't have that difference between the 20% and the 110% that we have in DFW.
They don't have the hail damage claims for sure.
So from a pricing standpoint, you're 100% right. $100 a month is gone. $200 a month is gone. $300 a month is going away. That if I was a lender, I would estimate somewhere between $400 and $500 a month.
Great to know. Fantastic. Well, if you guys want more information on this, again, Barney and I are members of your Realtor and Lender Committee. If you have any questions, reach out to your Realtor and Lender Committee, and we'll be glad to answer your questions, whether it be on real estate buying, selling, insurance, lending. We all work together on the Realtor and Lender Committee and learn a lot from each other. So thanks for spending some time with me today.
Thank you, Joe. Enjoyed it.